What's up, everyone? This is Silver Slayer, and welcome to your daily silver stacking video. Thank you for tuning in, ladies and gentlemen, boys and girls, silver stackers across the globe. You are going to have a chance, an opportunity to win some silver. Two lucky stackers are going to be winning some silver tomorrow morning, Sunday, 10 a.m. Eastern Standard. So if you have not entered my 48,000 subscriber silver giveaway, this is your last chance or you will miss it. So click subscribe, go in the description. That's the entry video. May the luckiest stacker win. I was going to do the announcement video tonight, but Sunday morning makes a lot more sense than a Saturday night while people are out partying or getting ready for bed. It's just not a very convenient time. Sunday morning, though, just makes more sense. Now, people, whether you're a new stacker, an old stacker, an intermediate stacker, a professional stacker, everyone has dealt with and can relate with panic selling, especially with silver being bearish. For the last 10 years, the average price of silver for the last 10 years has been $15. We saw it up to $30. We've seen it down to $11 last year. I mean, panic selling is definitely on everyone's mind, and that's because there's so much volatility and because there's so much happening with a global quote-unquote situation we're in. So we're going to be talking about the psychology behind it. I have 3 different articles. Here's what you should do instead of panic selling, which is a very good article, and the 2 main tendencies that cause you to panic sell. And most of these articles are talking about stocks, but just replace that word with silver because it's all the same at the end of the day. Now, the first article we're going to be talking about is what you should do instead of panic selling. And by the way, panic selling is what people do when markets are chaotic. Silver up to $30 during the Wall Street silver movement, now down to $23. That's because people were panic selling. You want to see the literal proof? Look at this graph. This is silver. Let's go to the 6-month chart. This is the Wall Street silver buildup. Silver hits nearly $30. And see right here, it plateaus, crashes. People are panic selling. Plateaus, crashes. People are panic selling. Plateaus, crashes. People are panic selling. This is the lack of experience. This is when people hop on the silver train, not knowing what they're getting themselves into, not understanding the markets, not understanding it's not a get-rich-quick scheme. It's a much slower-paced hedge against inflation. It's funny to think about because you would think that the average, the model investor would buy low and sell high. Buy the dips, sell the tops, right? I mean, that's investing 101. But most people buy high and sell low. Most people buy silver when it's up here and they sell silver when it's down here. That's because when it's up here, Wall Street silver's talking about it. It's all over the news. Friends, family, your neighbor, your cat, your dog. Everyone's trying to get a slice of the silver pie. But then it starts crashing. And people start to doubt it. And then the fear articles come out. Fear, uncertainty, doubt. And then people start second guessing themselves. So you can see how it's backwards. How most people buy high and sell low. That's the worst thing to do. And you know what? If you understand silver's true value, then when the price goes lower, you would be happier. Instead of worrying, instead of fear, instead of panic selling, you would be buying with a smile on your face. You don't need validation or confirmation for silver to go higher for you to be happy. When silver gets up to $30 again, you're going to see a lot of people happy, celebrating. But if you're not planning on selling for 10, 15 years, then why in the world would you want the price of silver to go up right now? That just means you have to pay a more expensive price. That doesn't make sense. If you go to the store and you want to buy a new pair of shoes, wouldn't you be happy if the shoes were on sale at a 20% discount? Why would you be happy if you go there the next week and the shoes are more expensive? So here's what you should do instead of panic selling. Panic selling is the worst thing that you could do during a stock market recession, or just, during crazy times of any investor's, career. So what should you do instead? The plan of action is below. So they do talk about a lot of stocks, the S&P, but all of this goes hand in hand with silver. And during all of the times that these, dates or these, crashes are happening, silver is directly getting affected as well. So the time frames are essentially the same. They're just talking about stocks instead of silver. So yes, understandably, many investors are frightened, and at times you may feel like throwing in the towel and just converting all your investments into cash. Or it doesn't have to be cash. Some people sell their gold and silver back to crypto, especially the people that came over from Wall Street bets, the people that were investing into Dogecoin or whatever it is, Bitcoin. They'll transfer back to Bitcoin. But panic selling is the worst thing that you could do. Selling in a downturn, you'd only be locking in your losses, right? Right now, you could say that you lost a whole bunch of money investing in silver. Let's say you bought silver at $30. In your perception, you're saying, I lost so much money. You didn't lose any money. If you sold right now at $24, you did. But if you hold on to it and wait a couple years until it gets to $50, $60, then you've made money. Temporarily, that's the price of silver. But if you understand the long-term picture, if you can step outside of yourself, stop paying attention to the day-to-day prices, then you will see that this actually is a good thing, because if you bought silver at $30, that means your dollar per ounce average is $30. But if you start buying at $23, you're lowering your dollar per ounce average, meaning you're going to make more money at the end of the day. So, times of stock market or silver volatility can be scary. But here are 4 better ways to react in giving in to panic selling urges. And this is the same thing with impulse buying as well. Impulse buying is heavily overlooked, but that is extremely important as well. I can probably make a whole separate video with that. So this is good stuff. Number 1, keep a long-term perspective, right? Think of the bigger picture. Don't get caught up in the day-to-day FUD, which is fear, uncertainty, doubt. Don't get caught up in the day-to-day prices, checking the price every couple of hours. That's irrelevant. If you're not planning on selling for 5, 10, 15 years, then right now, if the price is up a couple pennies or down a couple dollars, it doesn't matter. 2, invest cash that's sitting on the sidelines. Only invest as much as you're willing to lose. Some people I know are investing 75% of their paycheck into silver because they think that it's about to explode tomorrow and they need to get all the silver right now before it explodes to $100. That's what I thought when I started investing into silver in 2016 as well. I thought the same thing. I said, holy crap, I got to get all the silver right now, because if I don't, by next month or in a couple months, silver's going to be $100, so I got to get it right now before the curve, because nobody knows about it. Right? I had that very catastrophic doomsday worried perspective, and that's what I try to open up to you guys and tell you guys the reality that that's not going to happen. You have time, but if you're looking to get in before the curve, the time is definitely shortening. I just made a video yesterday, or actually this morning, talking about why $100 silver is coming sooner than you think. And it's not talking about the spot price reaching $100, but the physical price you'll have to pay for an ounce of silver could definitely be $100 when spot price is only 50 or 60. I mean, in 2008, you could buy, 2008, this is real. This is a real statistic. 2008, spot price was $9, but you could not buy a physical American Eagle for no less than $16. That's an 80% premium. 80%. Spot price is $9, but you can't buy a physical ounce for anything less than 16. 3, create an automated investing schedule, right? That's also good. That's a good strategy. Every month, maybe buy however much. I mean, everyone has different financial situations, has different time frames, different exit strategies, different goals, different types of, but whatever fits you, and be realistic. I know when you see these people unbox thousands of dollars of silver, it makes you want to be like them. But be realistic to yourself, or you can put yourself in a very dangerous situation having to sell all of your silver. So number 4, stay away from get-rich-quick investments. And the bottom line is, I guess, don't do that. But anyways, that was a good chart of just showing ways or strategies to protect yourself. And that's always a good thing to do. The more prepared you are, the better chance you have of being successful. So this second article goes into the psychology behind panic selling. And this is the way investors try to rationalize their decision to sell. And this is a pertinent topic. As soon as the markets go down, you're sure to see a number of investors sell their investments to try and limit their losses. And this is the people that think it's going to crash down to zero. Do you really think silver is going to crash down to zero? Do you think any investment is going to crash down to zero? No, it goes up a little bit, down a little bit, up a little more, down a little more, up a lot more, down a little bit, down a lot more, up a little more. But overall, if you can look at the bigger picture, it's gradually going upwards. So after all, if the value of your plan falls, and it isn't better to put a temporary end to your investment journey, maybe not, as selling during market downturns will make your losses real. If you remain calm and resist the urge to sell, your losses will remain hypothetical. It'll only be a number on your dashboard. But if the markets go back up, you could see your investments increase in value, and you could end up with a healthy profit at the end. Unfortunately, most of the time, fear is greater than a reason, and investors will follow the crowd and hit the sell button. Here's why. And I do want to mention something that he said in that paragraph. Cool, calm, and collect. Let's say there's 2 different stackers, 2 different investors. And this could go with Bitcoin, this could go with stocks, real estate, anything. There's 2 different people investing into the same thing, have the same amount of money invested, the same exact portfolio. Let's say the guy on the left side is very finicky, very worried, glass half empty, always, fearing and thinking the worst case scenario, and is very, anxious and finicky. Do you think that guy is going to be as successful as the investor on the right side that is cool, calm, collect, doesn't worry, glass half full, thinks about the bigger picture, right? He's chilling, he's not worried. Do you think that the guy on the left side, the worried guy, is going to be as successful as the cool, calm, and collect guy? No. So investing, there's a whole psychological approach to investing without even having to make any real decisions with your money or choices with your money. Just your character itself can translate into how successful you are. That's something that a lot of people don't think about. What makes investors act irrationally? The answer is simple. That's fear. Fear is a feeling created by a part of your brain called the amygdala. Back when we lived in caves and used stones for tools, the amygdala would come in handy against physical threats as it triggers the fight or flight decision, which would help protect us against dangerous things like saber-toothed tigers. In modern day society, this fight or flight decision making operates the same as it did thousands of years ago, but the threats we're facing are different. Instead of a saber-toothed tiger, it's stock market performance that keeps investors awake at night. Panic selling is a natural reaction to a threat, and it's exaggerated by the fact that people fear losses more than they enjoy gains. Wow, that's strong right there. That's real. But knowing that in itself doesn't always give people enough comfort to change their behaviors. And yes, that's why when prices are low, I make so many videos trying to encourage people, show people silver's true value, show people that silver is literally guaranteed to rise because it has a direct correlation to the dollar index, which we know is going to collapse and is inevitable. There's no outcome, not in a million different scenarios with candidate A, B, or C winning the election. There's no outcome that the dollar could survive or recover. And since we know there's a direct correlation to gold and silver versus the dollar, we can literally see that gold and silver will come out on top since the dollar is collapsing. And it has been. It's lost 98% of its purchasing power, 44% in the last 20 years. I mean, we're $30 trillion in debt. And we're throwing more trillions of dollars in debt on top of that. It's going to collapse. Every fiat-based system has collapsed. And gold and silver has survived for thousands of years. So since we know what is going to happen and how that affects the price of silver, then why should we be worried? Do you really think that silver is going to stay $23 in 5 years or 10 years? No. Think about that. So here's two main tendencies that cause you to panic sell. So, oh boy, the panic sell. It's an age-old mishap that so many investors will find themselves susceptible to, and one that literally takes years and years of practice to be able to successfully master. What even is a panic sell, though? A panic sell is when you see your stocks dropping like a rock and you can't help yourself. You see the stock down 5%, then down 8%, 10%, down 12%. Okay, you can't take it. You log into your account and hit the sell all button. And then boom, there goes your ownership in that company. Now what happens? Well, other than the stock immediately going back up, because that's how it always seems to happen, you almost have this sick feeling in your stomach regardless of what happens. You just lost 12% and then you sold. Doesn't that somewhat sound like you just sold low, the definition of what we were trying to avoid as investors? Unfortunately, this is something that is way too common with investors. It is extremely mental and emotional, and people just get in the way often. That is so important. It is emotional and mental, the psychological aspect. Take the emotions out. Invest with your head, not your heart. Step outside of yourself. Look at the markets realistically. Don't get caught up in fear. And look at this. Wow, look at this chart. So point of maximum financial risk, right? Optimism, excitement, the thrill, euphoria. And then the anxiety, the denial, the fear, the desperation, the panic. And then here's the opportunity, depression, then hope, relief, optimism. It is interesting to look at a chart like that and really break down, what's going through a person's head or their emotions when they're in this situation that they could or might end up selling. And this guy even says, I know I have. In fact, I feel like I can get on that roller coaster quite frequently. But that's also because I'm a proponent of checking my portfolio daily. And that's why I never tell people to marginal sell. I never tell people to be day traders. Don't go into stocks or crypto being one of those people that look at the markets every second of every day, trying to sell this and trade that and buy this and put in order. That will drive you insane. I know so many people that have literally gone insane because of the amount of stress and anxiety it takes to be a day trader or a marginal trader. Silver stackers buy silver when the price is low, hold on to it, throw it in a vault for decades, and then sell as the dollar is weaker. It's a hedge against inflation. But I do know some people that are in the cryptocurrency. I do know people that trade even the gold to silver ratio, and these things can still end up with the same exact, solution or the same exact consequence. But this guy, he stays rational, had a conviction in those companies, chose to add them. It is a lot with timing, and right now is the time to buy silver. I would even say right now is the time to buy Bitcoin. right? Nobody's talking about Bitcoin. Bitcoin's been very bearish. Now's the time to buy it. But you know when most people are going to buy Bitcoin? Once it starts going up and exploding again. When nobody's talking about it, that's when you buy. When everyone's talking about it, you missed your chance, right? Most people are going to start talking about Bitcoin again once it starts rallying. And that's when everyone's going to be trying to buy Bitcoin, Bitcoin this, all the articles. It's too late. It's too late. Right now is the time to buy Bitcoin when nobody's talking about it, when the price is somewhat low compared to the $60,000 it was, several months ago. That's when you get in before the curve. Before the curve. When nobody's talking about it, that's when you buy. When everyone's talking about it, that's usually when you sell, right? You could have sold Bitcoin at 60,000. When you could buy Bitcoin right now, and once it rallies, when everyone's talking about it, you could sell it and then use that profit to reinvest into precious metals. You get what I'm saying? It's not that hard, but people make it hard, and that's usually just from lack of experience or the emotional attachment. So anyways, I hope you enjoyed this video. I'll post the 3 links to these articles in the description. If you thought this video was 1, educational, 2, informational, 3, at least entertaining, make sure to smash the like button. I hope this video has shown you a little deeper into the psychological aspect of panic selling, how to avoid it, and how to be that cool, calm, and collect investor compared to that very worry, anxiety, crazy-filled, finicky investor. Because that outcome is never going to look good. Only red in those eyes, and the guy on the right only going to see green in his eyes. So yeah, thanks for tuning in. Make sure you subscribe, click the bell, go in the description. That's the entry video if you want a chance to win some silver. 2 lucky stackers will be winning tomorrow. By the way, if you've been sticking around this far into the video, I praise you. I can tell you're a very good stacker because you didn't click off this video thinking you knew everything. You wanted to get every single bit of information. I respect you for that. Shows a lot about your character, and I can guarantee that you are going to be a much more successful stacker or investor compared to the person that clicked off this video 3 minutes in thinking they know everything. So congrats, pat yourself on the back. I do respect you, and I can guarantee that you are going to be very successful just off that concept itself, that type of perception, that type of behavior, trying to get every piece of information in your brain goes a long way. It really does. So anyways, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.